Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, May 6th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that we continue to see overall uptrending behavior for the most part. The market continues to push higher and continues to honor the uptrending higher value structure of the pivot range here. This is a nice spot here, pulling back into the PIMAs, a little bit deeper pullback, but that's what we've seen here lately. And it's going to be, a do or die now, right? This is kind of a zone here where it kind of has to hold this LVN. We could perhaps get a little bit lower into the LVN, but if it starts to break through the previous or find acceptance below the previous month's low and break the LVN, it just opens up quite a bit more downside price discovery. All the way back to 27.91, perhaps even as low as 2700. 27.0375 would be that key level. So for the most part, this is a very important zone. We could go a little bit lower, but expecting bulls to come in and at least try to get this thing going higher. This could provide another push higher into the $3,000 level, which could be right around the corner here if we get another nice burst. Any failure on this move here would suggest that we would likely lead a lot lower. So we'll see how this plays out. In the intraday time frame, I would say that the rejection down here doesn't seem as strong. So it doesn't seem like a strong low like you would think would develop there if you're going to turn around. For a strong low, check out crude oil today. That's a much stronger low. In terms of the ES, though, it does have a very nice compressed range at the lows, suggesting there's accumulation happening at that area, and that could lead to a nice push higher if those late shorts are become trapped. All right, let's take a look here at the NQ. You'll notice right here with the NQ that you have very similar price structure to the ES, uptrending price action here. You can see higher value relationships for the month. Big gap down here already and kind of a defense off of this zone. Again, not the strongest low down there, but it has popped back above the previous low here. And also there's another very narrow compression that has formed since overnight trading, and that narrow compression suggests that there are late bears getting in, and if those bears don't get paid, if this thing starts to squeeze above 77.50, for example, it could be quite a move higher that could play out over the course of the day and perhaps even the course of the next 1 to 5 days. So if this thing is going to break out from this narrow compression here, oftentimes I say break down first, reject, and then this thing has a free and clear route to new highs. Very similar to how it played out over here. Broke down first and then boom. And then over here kind of got going over here, minor low failure, and then took off. So we'll see here if we can continue to see the same, or does the previous month's close or midpoint there give way? Because if so, it leads a move back to the previous month's low. All right, let's take a look now at crude oil. Crude oil here is showing very nice signs of rejection. It hit the $60 level, 60.04, which was our target from the upside. If you recall, looking at this on a 10-period average here, which we talked about a couple of weeks back, I mentioned on the 10-period average here, we're getting very compressed here, and if we get a breakout, we should expect about 6 handles of range. 6 handles of range. I say usually you get about 6 handles of range when this thing gets compressed on a 10-period basis, and that's exactly what we got. We got a breakout, and we got a move of 6 handles here. It's actually it's 656 to be exact, 154% of average. So again, you can see how this thing got compressed here, and then once the breakout occurred and we started to figure that 60 was the high, I mentioned that 60 or 66 was the high, 60 becomes the target down to the downside there. So it's gotten that entire move now, and the idea here is after this rejection that we're seeing here this morning, the tail that we're already seeing, I would pay attention to 60.60 to about 60.80 as a big time zone to keep defended, because if so, that could lead to an easy bounce back to the previous month's close. That could take us right back to 62.50 very quickly, and perhaps we could chop around in here for a while between 62.50 and 65. So again, we could have a nice snapback type of play here over the course of the next 1 to 3 days if price can continue to hold the 60-60 to 60-80 zone on retests. All right, let's take a look here at gold futures now. With gold, you're seeing a pop higher within a downtrend right now. We have not been able to break these lower highs this entire time. It's been continuing to show weakness on every rotation. Every rotation has been quite muted, and the following sell-off has been pretty strong. So right now we're seeing, another pullback. It's kind of double bottomed here a little bit, but it's still retesting the previous month's close. It's retesting the pivot range. It's retesting value, all from below after continuing to hold it as resistance. So this would suggest that, again, this pullback is opening the door for another round of weakness until price can get above 1290. I think this has a bearish tilt to it, but it hasn't gone. If it really wants to go, it could have gone by now, and it hasn't yet. So I'm still watching for the potential to see a break back above 1290. If this thing strongly breaks through 1290 with a price discovery type of day, that could finally lead to an upside push back above this range. So again, right now a bearish bias, but above 1290 starts to change the bias of that trend. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.